Hey guys, it's Gary Wong from GaryWongRealty.com. I'm here driving with my great friend Nick Leung from Verico Paragon. I've known Nick for a long time. He used to work at the bank at TD, then worked in the mortgage department as a mortgage specialist, and then he studied his mortgage license and became an independent mortgage broker with Verico Paragon. Today I'm just gonna ask some questions to my friend Nick. And hopefully, a lot of these questions I'm asking are a lot of questions that my clients always ask me. And I think who better to ask about mortgages than Nick here. So Nick, the first question, my clients, I want to ask is, my clients usually ask like, are there any specific mortgage strategies to use, like fixed versus variable? And what do you think about that?
You know, that's a good question. Actually, one of the most common questions I get asked from clients is whether I should go with a fixed or variable rate mortgage. And typically from there I take a step back, and the first thing we want to figure out is, one, whether that person can qualify for a variable, because it is actually more difficult to qualify for a variable than it is for a fixed.
Oh, I didn't know that.
Yeah, but you know what? That's actually quite in-depth, so we'll leave that topic for another video on another day. But to answer your question, actually, there is a there's one strategy that one strategy that I like to propose to clients that are in a position where they qualify for both a variable and a fixed. Okay. When a person can qualify for a variable or a fixed, and they are comfortable with the payments on a variable, or they're comfortable knowing that going with the variable there is a bit more risk, what I like to suggest is, if you're trying to decide between a variable or a fixed and you're okay with either as far as your comfort level, you can go with a variable, because right now the variable rates are so much lower than the fixed rate mortgage rates that your payments are going to be significantly less. But what you can do is you can take advantage of some of the prepayment privileges that the banks and lenders offer to you, where you can actually increase your payment. So instead of paying that minimum lower payment that the variable rate has, increase your payment so that it's equal to or more than what a 5-year fixed rate mortgage payment would be. So here's a quick example. Let's say you were let's say you had the option of going with a 5-year variable with payments, or $300,000 mortgage, 5-year variable with payments of $1,300 a month. Okay. On the other hand, you have the option to go with a 5-year fixed, again $300,000 mortgage with monthly payments of just over $1,400 a month. Okay. That's a difference of approximately $100 a month. Yes. So what I would recommend is, go with the variable rate mortgage, so you have a lower minimum, but increase your payment so that it's equal to the $1,400 or more if you're comfortable with it, and pay and have a mortgage payment schedule adjusted in this way. So what that does is every penny above the minimum amount of $1,300 a month goes directly towards your principal. Okay, so you can pay off your mortgage faster. Exactly. So if you look at it that way, if you're making an extra $100 a month in your payments, and it's all going to principal, well, after 1 year, you've made an extra $1,200. You've paid down an extra $1,200 of your mortgage principal. And then hence, the next year, you'll pay less interest. Exactly. So if you did that over the course of the full 5-year term, well, after 5 years, you paid an extra $6,000 off your mortgage principal. Wow. So that effectively will help you, one, pay your mortgage down faster, and in the process, pay a lot less interest. And a third thing that you've done is you've really just kind of hedged yourself in case rates did go up. Because if rates go up, obviously more of your payment, your regular payment, goes towards principal, or sorry, interest as opposed to principal. But because you've already increased your payment, you've allowed for a buffer room on your mortgage payment, so that you're still in a good position and you really don't have to worry about rising rates as much. Oh wow, that's a great tip, Nick. If you found that valuable, let us know below. We'll talk more in our next episode.
I'm here with Nick Leung from Verico Paragon, Gary Wong from Gary Wong Realty. Subscribe below, comment below, and we'll see you next time. Bye.
See you later.